Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Tuesday, December the 6th, 2022. I'm starting here on the 1 hour chart, and I'm enlarging the 5 waves up and the response. And because I want to get down inside of this so that we all can get an understanding of how I am now going to count this and what we need to see to give additional confirmation. So in essence, I am leaving the C there. I reverse this again, like this is not A, and then when this is a B. It is still an alternate view. That much I have to say. But we'll see how this actually comes undone. So I went inside this today and I started to count it. And if we're looking at this as being the C, and I'm going to put a 2 up there, this would be the infancy, the infant stage of an intermediate third wave down. What am I going to look for? By the way, what I'm going to call this is an anatomy of a chart. So we're doing a little post-mortem here, kind of digging it apart. And if this is the beginning of an intermediate third wave, what is the first move down? It's going to be a minor wave 1. Inside that minor wave 1 will be 5 waves of minute degree. We got to go 1, 2. That's where it begins. But I now, instead of doing 1, 2, 1, 2, 1, 2, check it out. As I went down in this really works out better to be 1, A, B, C, 2 ends in a failure, as evidenced by that strong reversal. It may have only lasted 10 or 15 minutes, but it was strong enough to make that a failure, and that was the result. The pressure was there. Regardless of this, so if we're going 1, 2, 1, 2. So not the first minor, the first minute 1, minute 2, subminute 1, subminute 2 of minute 3. We're building blocks, all right? So I'm building that wave. Minute 1, minute 2, end in a failure, subminute 1, subminute 2. Now I'm going to start counting. 1, 2, 3, 4, 5, 3, 4, 5 of 3. Catch it again. 1, 2, 1 of 2, 2 of 1 of 3, excuse me, 2 of 3. The third in and of itself subdivides. 1, 2, 3, 4, 5. So that's just of this little 3. Now we're going to do another 4 and a 5 of this upper 3. Then we're going to do another 4 and a 5 to complete the move. And that may only be the first minor wave down. Okay? We have 5 minor waves down. So we're in the very first one. We're going to be breaking these levels. Indeed, if this is what I think it is now, if we're going to count it this way, it's going to break here. And I'll take it up before I take it back down. So it will break a lot of levels. Third wave down, definitely going to break that level, definitely going to break that level, definitely going to break that level, and definitely going to break that level before all is said and done. This is a wave 2. We're going in 3. 3 should outdo wave 1. Now, back down. I'm going to pick it apart here. If this is only, we're working through the third of the minor 1, minute 1 of minor 1, minute 2 of minor 1, subminute 1 of minute 3, subminute 2 of minute 3, and it breaks down, right? Subminute 2 of minor 3, 1, 2, 3, 4, 5, subminute 3 of minute 3, a 4 and a 5, subminute 3, so it'll be subminute 5 of minute 3 and it'd be done. Then we get a 4. So we're counting everything. And now that it's beginning to form, it gets a little bit easier to recognize. And now, so initially that was very fast. And then we did that. But these, as you can see, hourly chart, 1, 2, now this one, yes, we went down and shot back up, but then followed through. So 1, 2, 3, 4, 5 hours of downside trading internally. Yep, had little rallies, it went up and down, but consistently went down for the day. So there's a swing trade if that's the type of trade that you're looking for. Now, I want to add something else here. Again, that's an hour. That's the opening today. Wow, wild. And then follow through. And then an hour of mix. And then we traveled lower, right up into the close. So very tradable. But if we can identify the wave that we're in, and the segments that we're in. So we're in the 3. We're in the minute 3. Again, minute 1, minute 2, subminute 1 of minute 3, subminute 2 of minute 3. Then we go 1, 2, 3, 4, 5, subminute 3 of minute 3, subminute 4, subminute 5, minute 3. Then we go through another 4, and then we put in a 5, a minute 4 and a minute 5 to put in the minor 1. So that's why it's going to take to roll. Okay. Eventually, that's ultimately what it could look like. But we're already in that. So this was real quick. 4 hours, you're done. This is taking days. All right. So we can take it down and continue. Building blocks. Well, bring the building blocks to you, as a matter of fact. So when you're analyzing it down, you're not going to really trade off an hourly screen. You some trade off of 15, trade off of 5, but you make reference and work your way down. And that's the 15, same deal. But I want to show you on the 5-minute chart how you can start to utilize Fibonacci to give you clues of where your next waves are going to come in. For example, here on this 5-minute chart, which a lot of people use, try to open it up a little bit. You're here, you've got this, and you want to put some parameters around what this is going to look like. Okay, well, all we have is fib and we have extensions. So we're going to add that and put in that and bring it up to there. So what we're looking for now is that. Well, 100%. Is 11,722. Wow, nice. And so, but it's 1 of 3 of 3, 2, 3 of 3 of 3, 4, 3. So we have more to go, but it gets down there and you can follow it on this basis. Again, we've been checking it out because what if it's a B wave, by the way, out there on a different level? It can be still. So, but if we're counting it as 5 down, we're in that 3rd. And now we can see we can plant this. We get the extensions for wherever this is going to come in. And it did. We got a rally, right? 5 down, 3-wave rally, 5 down, 3-wave rally. Another 5 down. Complete. Now we go up a tick. So 1, 2, this will be the 3rd when it finishes down here. And then it's 1, 2, 3, and then we'll get a 4. And then we'll take it down another, and that'll be 5 of the whole move. Remember, this is 2, so we got to go back even further. That's a 5-minute. Now, you can tighten that up, and you take that off. That's done. Now you want to see what this one's going to look like. Same process. I'm going to use, nope, that didn't work. You're going to use the, why is it doing it there? Because it's anchoring it on the bar close. Okay. That's what I told it to do. Slight changes. Okay. So here Now we plug it in here. Look at that. It's already gone. More than 100% of that one. Oops. So, and it did that before it went into the 4. So that could be the bottom of the smaller one. Then we get a 4. Still has some chances of going back, but this is for this downside. So if this is one more to come down, now we got some triggers. And you've got one more that you can use when we know, see, that one was for this, and it did well. When this is done, you're going to connect again. And you're going to bring it down to that low and then up, and then you're going to get the 5. So if that's the head, or we're even going to go a little bit higher, let's just call it there. And we get up to 11,604 in this small fourth wave. We're looking for 5, 11,394. But guess what? We got a 236 support we'll be whacking into. And how does that fit when we come all the way back out and we take a look back at that hourly chart? We need to break that level. This wave can do it. And we might be getting that done towards the end of the week. So I am going to count it that way. And that's what I'll be looking for. If it stops here or here and decides to turn and rally like there's no tomorrow, then guess what? That goes back there. This goes over here. And we're in the C wave up. Right now, I'm planning and I'm plotting what it should look like and where we should get to for a minor wave 1 should break below, putting this in place. Okay? It would, in my opinion, it would put it in place. Otherwise, B should not. If this is the internal B, it should not go below that level. In my view. And we're getting close. Okay. I want to go over to the S&P quickly. I could talk about that stuff, that inside stuff, all day. Here we've got a couple of trend lines. And because connecting, this one also was given by the same guy in my trade room. Very cool, because they work. And so he puts them on. And this one, he had put on at the October 13th low, and we ran it up to the November 3rd lows, and then that low, and it intersected at like 39.91-ish, 39.95, or maybe even at 4,000. And it accelerated. And that's why he brought it to my attention. That if we just kind of put it in there, when that line broke, it accelerated. So you got a little bit of like that. And that was the 4,000 level, by the way. So good stuff. Same deal. And I'm looking here. I'm going to pull this open. Now, the S&P, God bless it, has broken. Guess what? This, activate the text note, is going back to there. Or at least, hold on, I got to do it right. And that was the wrong chart. Got to do it right. Yeah, the X goes back here. Bring it down so you can see it. And then this is the A. So I'll use, no. This is the A. Activate, activate. Text note. And this is the B, obviously. And this, my friend, is the C. And getting pretty clear that it's more. It's likely also going to be that intermediate wave 2. I like the way that the S&P is breaking down. Better than the NASDAQ, and you thought, and I thought it would be the other way around. I thought there was going to be more in the S&P that could possibly hold it up. So back down to that hourly chart. Right there. Okay, let's open it. Let's take a look. There's the C. One, same kind of gig. 1, 2, failure. And I'm on the S&P. It's identical. 1, 2, 1, 2. 1, 2, 3, 4, 5 of 3, 4, 5 of 3, and a 4, 5 of 3. Or maybe, yeah, a 4, 5 to put in that minor wave 1. Excuse me. So they're identical. And here again, I had put in what this should look like, and it was already there. And I was just taking it from that high down to there, put in this. If I took it up a little bit higher, I would have probably likely come in right on it at 100%, which is nice. In fact, why don't I just try that? And we're going to remove that, and now we're going to put it up to here. There, to there, to, put it over here. And not quite, but it still has a little bit of room. So in any case, I like that the way that they're reacting. And again, it kind of fits into what I was talking about. Again, I don't have any confirmation of it, so I don't watch what larger players are doing and where they're moving stock. There are other people that do, or they hear about it from the larger houses. So, but I do think that instead of having where we're getting, I think we are seeing rotation towards year end. And I think this rotation is going to be pretty big because people have been in stocks and people have been jamming back into stocks during different moves, i.e. So I think it could take a little bit longer. And so that could begin. And it could get pushed into higher gear after the 14th. So, and these days are kind of going quickly, and then we're moving right into Christmas. So it may not be the best of Christmas because it could be wild and woolly. So, but in the S&P, we continue to find that we should have some support. Let me close it up, see if I can get, yeah, I got that. And then I got to see if I can get it opened here a little bit. Broke that. And so next up, we have 39.15-ish, then we have 38.92, 38.78, 38.55. That's the 1.618. But again, that would be this leg. Right off of this level would be 1.618 of that leg. And very possible because within the three, what we're in right now is that third. Okay, just follow me on this. 1, 2, 1 of 3, 2 of 3, 1 of 3 of 3, 2 of 3 of 3, 3 of 3 of 3, 4 of 3 of 3, 5 of 3 of 3. So we've got some moves to do here. We're inside. We're inside the swirling storm. Now you want to stand where it's calm and just kind of pick it out as it's flying by. So focus needs to be on, these are the moves where we can make money. These are the moves that we should be able to trust the downside. In fact, that's where it's, that pressure should remain. And it would likely start to get even more intense Wednesday, Thursday, as we're getting ready to push into Expiration Friday. So that's kind of what I'm going to look for. Again, the NASDAQ needs to put that confirmation that we're outside of this fifth wave, so it's likely not a B wave with a C, with that C wave yet to come up. So we're tightening up the grip on calling this intermediate wave 2, and that we're going to start to drop, and our trades will come on the sell side. Scalps and the like will come from the longs. So don't get me wrong. It just depends on how aggressive you are as a trader and what time frame you're going to sit and do it on. a 5-minute, 15-minute, even an hourly chart. You can start to find some trades, and you're likely going to be able to find the same things in charts of Apple and charts of AMAT, Amazon, etc. So you'll be able to pick others that are going to go and follow along. The volatility in Apple is pretty sweet. So there's that. Anyway, I'm not going to carry on all night because then again, we'll be here all night. So I would, again, look for the pullbacks are there. And again, when I break this down and we take a look at it on a 5-minute chart, it's not a bad move. That's where it stopped, 39.21, and we've gotten as high as 39.48. You're not going to sit necessarily with a short position unless you were short at 39 or 4,000. Then, sure, because you know it's just going to be 3 waves and you got more to go. But if you're just day trading and you're in here at the end of the day, you can ride it. That's a good ride. That's 20 S&P points. Nice. All right, I am going to be done. Have a great trading day tomorrow, and the next update will be on Wednesday the 7th.